What you want. All right. Welcome to our Blockchain Lunch and Learn. I'm John Hargrave. I'm the publisher of Bitcoin Market Journal. And here you see us in our beautiful offices at 100 High Street at Boston's Blockchain District. And I'm joined today by Jessica Rydella, our amazing blockchain analyst. Jessica, welcome.
Thank you. I am so excited to be here with you all. Like John mentioned, I am one of the analysts that has helped put the rating system together for countless ICOs, pre-ICOs, and other altcoins that we've reviewed. So really looking forward to being here today and sharing a little bit about our system of rankings with you guys.
Terrific. So I want to start with a story, and it is the story of the very first purchase that was ever made with Bitcoin, these two pizzas. In the early days of Bitcoin, a Bitcoin user named Laszlo Hanwitz sent out a note to all the early Bitcoin adopters and said, I want to buy some pizzas. So get some pizzas delivered to my house and I'll pay you 10,000 Bitcoin. And somebody took the 10,000 Bitcoin, called the local pizza delivery company, had them send over these two pizzas. 10,000 Bitcoin. Today, those Bitcoin be worth $67 million in today's prices. So there's kind of two ways to look at this story. The first one is that he probably overpaid for the pizzas. The second one is that he actually did something historic with that transaction, was that he showed Bitcoin has real world value. He showed Bitcoin could be used, a digital currency could be used to purchase real world goods. And in doing that, he's a hero. He really is a historical figure because he kickstarted this whole $500 billion economy. So how do we value these new blockchain-based assets? We are here actually on the campus of Babson College, where it is well known for their entrepreneurial education. And one of the legends was this fellow, Jeffrey Timmons. And Timmons came up with this entrepreneurial scorecard, and it was really kind of genius because he basically said, let's say you're an entrepreneur and you have like 3 ideas, and one of them is like a car wash chain of car washes. The second one is a new quick serve restaurant, and the third one is a factory that makes specialized machine parts. Well, those are 3 very different businesses, 3 very different ideas. And he came up with this scorecard, this way of rating different entrepreneurial ideas. So he had all these categories that you would look at each one of your ideas, like the market, and the growth prospects and margins and so forth. And you would rate each one of these ideas on a scale of 1 to 5, and then you would roll all that up. And this was very helpful because it allowed entrepreneurs to see, with all these very different ideas, which ones were most likely to be successful in the long run. And that's exactly the situation that we're in the blockchain space right now. So as investors, as we look at different token offerings or different altcoins or cryptocurrencies, they're all completely different, right? Some of them are like payment tokens. Some of them are more like utility tokens. Some of them are more like equity tokens. We have tokens that enable you to predict the outcomes of various markets, and we have tokens that help you successfully go on a date with someone. They're all over the map. And so we need a common framework for judging, analyzing, rating, and reviewing all these different projects. And that's how we came up with our blockchain scorecard. So we published this article, myself along with my co-authors, Navroop Sadev, the Harvard economist, and Olga Feldmeyer, former Swiss investment banker. And it's called How Value is Created in Tokenized Assets. You can look it up on ssrn.com right now, free of charge. And as part of this, we created a scorecard. We used the Timmons model and we tweaked it or adjusted it for token offerings. And the idea is it lets us do our due diligence on new token offerings, whether that's ICOs or whether that's cryptocurrencies or altcoins. And you have categories, you label each one 1 to 5, and then you average all those up. And we need something like this because, as we all know, everything is being tokenized. And in the future, it's not just going to be cryptocurrencies and ICOs, it's also going to be real estate. It's going to be fine art. It's going to be all kinds of other assets that are being put into blockchain-based tokens. And I think there's wide agreement that we need better analysis before investing. We need more due diligence, and we need tools to do that due diligence. And moreover, we need a way of comparing apples to apples. So the brilliance and beauty of this model is that it allows you to compare very different types of projects, but give them all a rating or a score at the end of each one. And that's what it's all about. Now, how we should value tokens as investors is like we would value any company or any stock or security. We would look at things like the market, any competitive advantage. We'd look at the team, how good they are, the mechanics, how does the token work, and how do they plan on getting people onto their blockchain. But how we actually view tokens is much different. We are easily fooled by things like well-known brand names or good-looking websites. And there's a great book called Thinking Fast and Slow by Daniel Kahneman, who won the Nobel Prize. Highly recommend it. He talks about some of the ways that we as investors fool ourselves, some of the ways that we get caught up in these cognitive illusions. And one of them is the herd behavior. So we all are herd creatures. That's just kind of baked into our DNA. And so you see this in the blockchain investing space, where it's very hard to get people interested in a project. We call that FUD, or fear, uncertainty, and doubt. But once enough people start getting interested in something, then all of a sudden everybody wants to get involved. We call that FOMO, fear of missing out. And a lot of what blockchain companies are trying to do, especially in the early days, is move you from FUD to FOMO. That doesn't mean that they're any good on either side. What it means is that we need to try to compensate for that cognitive illusion, that tendency to fool ourselves. We also trust what we know and fear what we don't. Again, this is hard-coded in us from millions of years of evolution. If we saw something rustling in the bushes, we wouldn't know whether it was harmless or possibly a saber-toothed tiger. So we learned as humans to fear things that we know. And we also learned to trust things that we do know. And that is the principle behind branding and advertising. The more times you see a company's name or logo, the more likely you are to trust them. So we have to be careful about that as well, because just because a company is getting a lot of buzz does not mean that it's a good investment. And we're easily impressed. So when we see founders or team members who are from well-known brands or institutions, we have what they call the halo effect in Kahneman's book. And that means we tend to confer that trust in the institution onto the person who's associated with that institution. And you all know how this works. If somebody says they went to Harvard, you suddenly think, well, they must be smart. And I can tell you, that's not true. Not necessarily true. But that is how halo effects work. And that's why and how we created the Blockchain Investor Scorecard. This is free and open to the public. So part of our goal with this is to open source it and really make it the industry standard. By making it widely available to as many investors as possible, we're all going to be able to use this tool to rate and review these new token offerings or cryptocurrencies, and we're going to be able to compare all of our ratings across each other. And we're really starting to see some traction on this. There was a story just this week about Circle, the large blockchain company Circle, releasing their own criteria for analyzing new companies to put on the Poloniex exchange, and it looks strikingly similar to the Blockchain Investors Scorecard with 5 categories, each with subcategories. So we're super excited to see other people taking this model and really starting to institutionalize it. And how it works, I'm sorry, that is a putt-putt golf scorecard. But it's very similar to this in that there are categories, and we're going to rate and review each of these categories. Each category, such as token mechanics, will have between 3 to 6 questions or subcategories to answer. Jessica is going to go through that with you. You give a 1 to 5 rating for each one of these. Then you average the subcategories, and then at the end of all this, you average the categories to get an overall 1 to 5 star rating on that blockchain-based opportunity. So that's how it works, and I'm going to pass it over now to our star analyst, Jessica Rydella, who's going to go through each of these 5 categories along with a little bit about the accompanying subcategories. Jessica.
Thank you. So, John, that was an awesome overview. And like John alluded, you know, the crypto market is extremely saturated with all these new players. So it's really important to understand what goes into these projects so that you can kind of separate the winners from all the noise. So that is what we are here today to try to help you better understand so that you can be a savvy and smart investor. So first is market. So John, are you going to be controlling that? You got it? Okay.
I got it.
So this is one of my favorite bundles, I guess, to analyze when I first am looking at a new investment. The number one thing is really understanding what problem the ICO or pre-ICO or crypto is trying to solve. You know, if there isn't a clear-cut problem, they're going to struggle. And so if we take something like Monero right now, right, that is a crypto that's focused on, you know, the peer-to-peer financial space. And their problem that they're trying to solve is, you know, there are a lot of other cryptos in that space, like Bitcoin, but what they're focused on is really helping with user identity and making that private. And that's a huge problem that a lot of people are concerned about, you know, hiding their transactions, hiding the identity of who's transferring money and to where. So when we look at this, we want to make sure that we're evaluating, you know, is there a clear-cut problem being solved, or is there something unfocused and there's too much going on? And that kind of leads right into the customers. We want to be able to identify a clear target for the token. And we want to make sure that, you know, they're not already on another platform that's going to make them unreachable. So with something, again, like Monero, I'm just using this for an example, that's a clear defined customer base. Anyone who wants their information, their IP address, and their transaction amount private is going to be interested in this project. And then we move on to the value created. So if we have a problem being solved and we have a customer base, what value is that customer base going to gain? And for this, you know, we want to really look at multiple aspects. We want to look at the platform. We want to look at, you know, is there a foundation that they're going to be a part of? Are there, you know, competitive technical advances on this that don't exist in the market? So value creation is huge because that's really what's going to spur on user adoption. Then we want to look at the market structure. And for a lot of these areas, you know, it's going to be an emerging market because it's incorporating crypto, which is such a new space. But we really want to make sure that there's room for growth and room for incorporating crypto into this space. And so for most of the projects that we're analyzing, these are emerging areas, and that's good because we don't want it to be too concentrated or too mature where there's no room for entry. Then that also kind of goes along with market size. We want to find that just right area. We don't want it to be, you know, too small, and we also don't want it to be so large that it's impossible to penetrate. So we found that, you know, right over the $100 million mark seems to be the sweet spot for that. And then, of course, I work in the cybersecurity range. So this next bucket of regulatory risks is something I'm very familiar with and something I really take a lot of time to note. These are all very new projects. And just because they say, you know, we're based in the Cayman Islands, doesn't mean that they're exempt from regulatory risks. So we need to make sure that we are evaluating, if they want to spur on mass adoption in the US, in Europe, what are the regulatory mandates that they're going to have to be aware of? And so if you're looking in an area that involves healthcare, you're going to want to look out for things around HIPAA. If we're doing something in retail, PCI compliance, finance, Sarbanes-Oxley, and then of course anything with data regulation and sharing is going to have to abide by GDPR, which is the new European regulation that just came out this May. So all of those things are areas that we really want to analyze and evaluate, and that helps us kind of come out with our average market score.
So for regulatory risks, you're almost never going to have a 1 in this space, right? Like you're going to have some amount of regulatory risk just because we're in this new space. If you have a utility token, it's probably going to be higher. We don't know how those are going to be regulated. If it's a straight up equity token that's selling equity in a company, then that's probably going to be lower.
Right.
And I also just want to state on the problem and customers, that is the single largest problem for most new token projects. Our corporate parent Media Shower consults with companies to help them focus the problem and get it into a clear positioning statement. And it is so difficult for most crypto founders to do that because they have so many ideas. They're all over the map. It's such a new industry. Being able to clearly define, here's what this thing is and does, and here's who will use it. Those are absolutely the most important things to look at here.
Agreed. Great. So the next is the competitive advantage. As we discussed, this is an extremely saturated area. So when we dive into these, subsets on here, we're going to be looking at what separates this project from the rest of the pack. So we can go into the next slide. So the first one, of course, we're in a new platform area. We're in blockchain. We need to evaluate, is this an existing blockchain platform? Has it been peer reviewed? Is it proven to work? So a lot of these ICOs that we're analyzing are built on platforms such as Ethereum, which is great because, this is the Ethereum platform has a foundation. There are a lot of research and development funding that's going into ensuring that this is going to be successful. So this is important to kind of take in and into your analysis, because if someone's recreating the wheel and it's a new blockchain platform that's not been tested, it's not been reviewed, they haven't seen how it scales, there's a lot more risk with something like that. And then the second area that we want to focus on is lead time advantage. So it's really important here to make sure that a current project is not hopping on to a wave of success, because at that point, what really differentiates them from, the other players in the field? We look for projects that are really getting a head start on something that's disrupting the marketplace. So that's why we want to look for someone that's really leading the pack in terms of innovation and a market disruptor. And then, of course, the last bucket, contacts and networks. This is something that I think is incredibly important. Everything from an advisory board. Do they have an advisory board? Are they working with, depending on the industry, the leaders of that industry? If they're working in healthcare, who have they already been in contact with hospitals or insurance providers? If they're working in finance or assets, who is their network? And that's really going to help give an indicator of how well they're going to perform in the future.
I'll also add that with the technology and blockchain platform, we do rate them higher, as Jessica said, if they're an ERC20 compliant token, because there's a broad ecosystem already built up around that standard, or Hyperledger as well. If they're going to go off on their own and create a totally new blockchain, that makes us rank it lower because you're starting from scratch. Also, on the contacts and networks, any partnerships that they have, other distributors or key partnerships of any kind would really fall into that. And I'm sorry, the other thing on technology is any patents or other intellectual property that would give them a competitive head start.
Great. And so this is a fun one, management team. I mean, the management team is the core of any project. And if you don't currently think in that way, maybe it's time to reframe your perspective, because it is the one that's going to propel this forward and really make sure that everything comes to fruition. So,
and by the way, that's the most
within
awesome image ever painted in the history of humankind. That is the original Star Wars cast as a rock band. Am I right, Jessica?
It's perfect. So, yeah, we want to make sure that they have a track record of success. When we're looking at the entrepreneurial team, it's, I'm more inclined to invest when I see that they've done multiple projects in the past that have come to full success. It's very easy to come up with ideas and, put them in a little black book, and, they might not go anywhere. But if you have an all-star group that's really, shown and demonstrated that they can make things happen, I'm more confident in that. If you have a weak solo entrepreneur, it's, that's not to say that they can't make it happen, but it's a lot harder. So for me, I like to see that they have a demonstrated track record of success. We also want to look at their industry and technical experience. And again, if you're working in a platform for finance, we want to see that they've got a really great track record with financial experience, as well as crypto and blockchain. And so one of the things that I find is sometimes these projects are polarizing with their management teams. They've got a lot of great blockchain experience, but they want to work in healthcare and they've never done that before. And so in situations like that, I'm a little concerned. But when you see that a project's got a really solid group of developers and a robust group of developers and advisors that have worked in blockchain and crypto and all of that, as well as their own personal experience in the industry they're trying to break into, then that's a solid track record, and that's something that we would rank higher. And then, of course, integrity. It's very important to kind of go beyond just the LinkedIn profile for your management team and to really evaluate, what's happened in the press. And some of these, you find some unsavory things that have happened with some of these projects. Maybe they had claimed that they had funding and then the funding was never there, or they're consistently missing roadmap deadlines. So it's important to really understand, how the group works. Do they have a Slack platform where they actively are responding to questions? Are they receptive? Are they open? And I think that's really indicative of how they're going to respond as the project gets larger. So integrity is something I really dive into when analyzing.
Agreed. And just some common sense rules there, because we talk with a lot of blockchain founders and folks in the space. You kind of get a sense pretty early on if you're dealing with somebody shady. And I think let your intuition be the judge. If you feel like they're dodging questions and they're not quite on the up and up, you're probably right. Similarly, if you see pictures of them on the website with sunglasses on, that's a pretty big warning flag. Or if they don't have any photos, or they're hard to track down, or they've got a bad rep online, like all those things are generally red flags. On the entrepreneurial team, I was recently speaking on a panel with Ariana Simpson, and she pushed back and said, well, a lot of the projects that she invests in are with younger entrepreneurs who just don't have a track record of success because it's their first venture. But even in that case, I submit that they have some track record that you can look to, even if it's their academic history or other things they've built or projects they've been involved with. You still need to see some track record of success before you should go in with them.
Definitely. Okay, and this is an interesting one. So token mechanics. When we look into these buckets, we really want to make sure that there's no application misalignment here. We want to make sure that these projects actually require a token to be successful and that there's value added. So when we look at the token required, I always look for projects that you actually need to leverage the token in order to access the platform. And like John mentioned earlier, there are a couple different areas of tokens. They can be used as a currency, like Bitcoin, Monero. They can be used as a utility token, which would allow you to actually perform activities on the platform. It can be an asset where the token actually represents an actual product, or it can act as something like an equity where, it acts as a share to the company, allowing you consensus and voting rights and things of that sort. So when we look at token required, we want to make sure it falls into one of those buckets so that there's actually a purpose to the token. And that it's really, leveraging the platform or investing in the asset would really be impossible without said token. And that kind of goes into the value added as well. We want to make sure that this is not just copying the latest success in the crypto world. We want to make sure that it is differentiated. And that goes back to kind of with the lead time in our previous slide. We want to make sure that they're really leading the industry on this and they're not copying something that's been successful. If someone else now were to come out with a privacy token to rival Monero, that's a great use case, but it already exists. So we want to look at that it's not a copycat token and that there is a token required. The next thing is important, decentralization. This is what blockchain is all about. We want, in crypto, we want to make sure that there aren't middlemen required, that it's really the users doing the work, that you're not reliant on a third party to make the platform work or transfer your money or, share your opinions and have consensus for a company. It's all about making sure that the users are doing the work. And then when we look at token supply, we want to make sure we're trying to move away from centralized systems and even in finance with our banks are constantly inflating. We're moving away from that. And so we want to make sure that the token supply is fixed. It cannot be inflated. And we want to know that there's a known quantity of tokens. So we don't want the value of that getting diluted in the future. And that really kind of plays into supply and demand. And then we want to make sure that there's a public exchange that is known and reputable. There are a lot of exchanges coming out there now that I'm sure in the news you've heard about getting hacked. They don't have the proper security. And it really puts the token at risk as well as users and their funds. So we want to make sure that the digital exchanges that these tokens are on are actually known and reputable. And then, of course, one of the most important ones is we want to make sure that there's a minimum viable product, the MVP. We don't want to be investing in things that are, high in the sky, dream world proposals. They might sound great on paper, but if they don't exist, that's a huge hurdle that we're going to have to come over. So we want to make sure that the product is functioning and goes beyond just a white paper.
Our head of marketing, Pete Angus, recently described that as like people want to raise $40 million with an idea. Well, we shouldn't be investing in projects with just an idea. We should see something, because if you've created that minimal viable product, if you created something that we can see, you've already attained a lot. You've gotten through a lot of the early problems and roadblocks. You've developed a functioning team. You actually have shown that you can code and deliver something, no matter how kind of like held together it is with kind of a baling wire and twine, as our head of development, Rob, likes to say. At least it's there, like at least you have something. And the other thing I want to focus on is making sure the token is really necessary. So we see projects all the time where clearly blockchain is being used just as a fundraising mechanism, but they're trying to justify the need for the token through some convoluted token mechanics that really make no sense. So you have to ask yourself, are people really going to use the token in the way that these people are describing? Would I use the token in the way that people are describing? How would I use the token in the way they're describing? And just running those common sense tests will help a lot. As Jessica said, there are lots of legitimate use cases for tokens, like equity tokens, where you're actually getting equity in the company. That is a proven, well-established use case. It's very much just like buying stock on the blockchain. It's very simple. But when you start talking about utility tokens where you're paying to get access to something that you don't know if anybody's ever going to really want access or if they're going to be able to build the whole market around it, that's when you need to ask those questions.
Great. And then the final bucket is really around user adoption. This is what's going to determine whether or not a project takes off. We need to ensure that it's something that individuals can understand and actually want to use. So that's why the first subset of this is technical difficulty. And I think in this realm of crypto and blockchain, it's always going to be a little bit difficult for a non-technical person to understand because this is new technology and we're ahead of the times. So to take that with a bit of a grain of salt, but what it comes down to is, in my opinion, is it making people's lives easier? Is putting this on the blockchain and using a crypto going to enhance the user's ability to access a platform or transfer money or get shares of a company? That's something to understand. also the halo effect. And this kind of goes back with our networking of management team a little bit. It's important to know who the token and the platform is associated with. If there's a strong association with an already well-regulated and well-received brand with a huge mass adoption and user base, it's going to be great, because then this new project is going to kind of halo off of that. So that's when we would rank something stronger, if they've got those established partnerships. And then last but not least is the buzz. And something I always do, I'm constantly on Reddit, on Twitter, checking out what's new on YouTube. And I find that the projects that have the most buzz, the most Twitter followings, the most, word on the street are the ones that really gain the most adoption. If we see something and there's not that much social buzz, they don't have many followers, it's kind of an indicator that the public is not really that into it. And at the end of the day, user adoption is what's going to fuel the project's success.
Yeah, user adoption to me can be thought of on two levels. And the first is, how are they going to get users on the blockchain? How are they going to get them to use this? I say all the time, the blockchain is about people. You have to get the people on the blockchain for it to be useful. So is it something that people can easily just describe to each other in a sentence? And that's where the vast majority of projects fall down. If you haven't simplified it enough that you can explain it to your grandmother and she can explain it back to you, then you haven't simplified it enough. But the second idea behind user adoption is, are there enough investors to kind of drive that investor demand? And that is not only to make a successful offering, but also to provide the liquidity. You need a market of buyers and sellers. So are investors going to trust it enough? And are they starting to talk about it in a way that you know that this has got critical mass? There are some tools that you can use to measure the buzz as well. We use BuzzSumo. And another great site is CryptoKuma, which actually measures social mentions of all the top altcoins and graphs those out for you. So this is token valuation in action. We sometimes have investor meetups where we'll take real life ICOs or new token offerings, and we'll divide the group into two teams, as we did here. One team gave their name the Crypto Gods, and the other team were the Dragon Lords. And then we go through each of these with the scorecard and average up their ratings. We look at how each of the two groups rated those respective projects. And then often we'll go back and reveal what the ICO or the token offering actually raised and how close they were. And it's a really useful exercise because it shows there's still a judgment call with all of these ratings. You still have to use your judgment and your brains to get to those ratings. There's no right answer. Nor is this the only data point that you should use in making an investment decision. But it is a really powerful one because it allows you, again, to see across all these different types of disparate projects which ones rise to the top for you and which ones should be avoided. Our investing philosophy, in a few words, is we look for great projects with great managers, just like the great investors like Warren Buffett and Charlie Munger, looking for great companies run by great people. We also look for blockchain projects with lots of users. Again, network effects are at play with all these blockchain offerings. And so the more people you have on your blockchain, generally speaking, the more valuable your token is going to be. We do analysis of all the projects on our site, Bitcoin Market Journal, using this scorecard. And we're always looking for people to challenge our beliefs. So we try not to get complacent or too proud or too locked into our own ideas about these, because we want to constantly be exposing them to other thinking and battle testing them in real life. And most of all, we want to look for projects that add long-term value. So think to yourself, in the blockchain ecosystem, which we're still early days, it's like the early days of the web, and think about all the things we needed back in the early days of the web. We needed browsers, we needed developers, we needed better tools, we needed graphics, video, we need all these technologies to really make the web grow and thrive. Well, we're in the same place in blockchain right now. So think to yourself, what are those projects that are going to add the most value, and look for solutions or projects that are offering good solutions in there. And that is our presentation on the Blockchain Investor Scorecard. This is freely available via our site at Bitcoin Market Journal. We will also send this out to those of you. If you would like to join us for future Lunch and Learns, I encourage you to sign up for our mailing list at bitcoinmarketjournal.com. And if you're in the Boston area, you can join us on our meetup page, which is called Blockchain Lunch and Learn in the Boston area. And we would love to see you here. We're going to open it up for questions, but I'm going to stop the video now. So thank you very much for joining us, and we'll see you next time.